Hey guys, Mike here. So obviously the stock market has been on a tear, another huge green day. I mean, I feel like we're back in like what, March or April of 2020 when it was just green day after green day, like ripping your face off and stuff. And I mean, you got meme stocks going crazy. It's just nuts, right? And you would think there's not a care in the world happening. Everything's just like really perfect, right? But obviously there's a lot of issues we were still facing that sent us down. Once again, though, institutions price it in and go, well, send you right back up, right? And who knows how long this is going to last, but there's one thing that's been getting a lot of play on YouTube, especially in the news. You hear it every day. So I decided to look into this because I got kind of tired of hearing about it and not really knowing the facts behind it. So I'm going to present the facts to you. And that is this 2-year, 10-year Treasury yield inversion. And, we're right there on the cusp of it, and it has predicted every single recession. And by the way, just take the word recession out, because what it is a stock market crash, right? Because you're already in recession for 6 months, because a recession is literally just GDP declining 2 quarters in a row. By the time you get to the second quarter, you're still declining. You're already in the recession, right? And so, and I'm going to show you the chart. You'll see. It just predicts a stock market crash, really is what it does, right? No exact time frame, anywhere between 8 and 16 months, somewhere in there, but no exact date to it, right? And for the first time since 2006, I believe yesterday, the 5-year and the 30-year actually inverted. And all that means is the 5-year is yielding more than the 30-year yield, or 30-year bond, excuse me. And of course, we know, anybody who does investing knows, usually the longer you tie your money up, the more interest or the more yield you're going to get, the more money you can get back, because it's a lot more risky tying your money up for that long, right? Well, now it's not the case, okay? And that's the same thing between the 2 and the 10. People are going to get more money for putting in the 2-year bond than they are the 10-year bond, okay? And that's not good for the economy. So that's why it predicts a crash, or if you want to use recession, go ahead. But, it's just one of those things that they put out there and say, oh my God, it's happening. And I see all these YouTube clips like the fire and, cue the fire and here we go and it's over and the stock market's going to crash. And you're like, yeah, eventually it will. But I'm going to show you exactly how the market actually responded the last 2 times this happened. And I'm going to show you exactly how the FANG stocks, Microsoft, Apple, all those stocks, Tesla, how it actually responded, right, when this news came out, and what happened until we actually did finally hit a recession. And I think you'll be pretty dang surprised. But what's great about it is, also looking at this, you can't time the market perfectly when it's going to drop. But when you look at it, what I'm going to show you, you can go, I can be much more prepared. That's for sure. I can actually put hedges on, right, in a certain time frame, or I can take profits off the table a little bit or something like that. Or if I want to short the market, I can short the market, And so you're going to see that as well. And so take that tool with you. And so, don't forget, just before I even get into this, that I think it's stopping tomorrow. Webull's giving out 5 free stocks for people who open a new account and fund it with any amount of money. The 2 free stocks you get for opening the account are valued anywhere from $300 to $300. The deposit bonus stocks, you get 3 of those, each valued between $7,000 and $3,000. And so if you're getting out of it, hit the like, subscribe button, and notifications all. Really appreciate it. And let's go ahead and get into and see exactly what's going on with a 2-year, 10-year yield inversion, because we are right there. And you can see right here, guys, I mean, on the chart, that line right there, that little blue line, that's right there. If once it breaks that and it goes basically above it, that's when the clock starts, right? That's when we're going to end up inverting and coming back down. And so there'll be the inversion, as everybody keeps talking about. And so, if we scroll back here, we can look at, when the last 2 times this has happened, right? And it's happened many more times, but just going back into the 21st century, looking right here, you can see it's around last week of August 2019 this happened. And so it inverts, boom, goes down. We end up having a crash in 2020. And, even before that, people said we were heading into a recession in 2019 anyway. And you can kind of tell because they were lowering interest rates. That's usually a red flag, and I'll show you that as well. And if you also notice on the chart what I'm pointing out here, look at these head fakes. It comes up, gets right there at the line. It says, nope, not quite. Trades sideways for like another couple months, and then head fakes again, right? And so pay attention to that, because we could get a head fake here. There's no doubt about it. We could get a head fake. But if you look right here, back in, what is this, 06 right here, it crossed the line in January, February, 06 right there, came back down, went right back above the line in 07. And so they're on the clock, right? And then it ends up inverting right there. And of course, we have the crash in 08. Actually, it started in November 2007, to be technical about it. But, let's just see, starting in 08, how did the indices basically once this news came out, how did it react? And look at this right here. You can see exactly how the indexes responded to this news. You think, oh my God, we're going to have a recession. What are we going to do? Well, they just proceeded to run up, right, until you hit the recession or the crash, right? QQQ goes up 22%. The SPY is up almost 8%. The Russell, which is the small caps, up about 3.5% before it finally hit the dust there. And then looking at, a lot of the FANG stocks. Remember, you didn't have Tesla back in 07 here, okay? So, you look at these stocks right here. You got, they barely even made a dent when they got the news. And then look at the run up here. You end up with Apple up 131%, Amazon's up 135%, Google goes up 52%, and Microsoft goes up 24% after that inversion, okay? So it goes up basically the entire year until November, and then November is when we end up having the crash, or you want to call it the recession, then you can call it that. And so you can see great response there. Then we look in, the most recent one, 2019. You end up getting the inversion the last week of August, but you can see what happened. They just started going straight up, right? And so you can see from August and going to September, they're going straight up. And then we pull out before you even get to what happened in March. You end up with these massive gains where you got the QQQ up 25%, SPY's up 15%, and small caps and IWM go up almost 9% right there. And then when you look at the FANG stocks right here, this is when you actually got the news right there where the little pointer is. And then, of course, what happens? You end up having Tesla going up 195%, Apple's up 48%, Microsoft's up 23%, Netflix goes up 12%, Amazon's basically flat, and then Facebook's having a rough year all along, as you can be. But see, most of them went up and went up a whole bunch during that time frame. And look, is any of this guaranteed to happen a third time? No. Why? Because algorithms control everything now. Okay, they didn't really control it as much as 08, but in 2019, I'm sure we had a lot of algorithms, right? So this can be programmed in. We got a lot more going on this year than we did, any other year. But I'm gonna tell you the reason why I think this happens, and institutions know this, and why you see some of those growth stocks, like the FANG stocks, going almost parabolic, especially in 2019 when it started ramping up in the beginning of 2020. What happened? One, because they know the music's going to end, right? Okay, they know there's a clock ticking, and so it's time to make money, right? Take profits, hedge, and then get the heck out, right? So it kind of, in a way, gives you an advantage, okay? But the other reason is because when we know they're going to go into a recession, remember, you don't know you're in a recession until you've already passed 2 quarters. You got to have 2 declining quarters of GDP, right? So you don't really know you're in it, but the Fed pretty much knows. They can tell by all this data coming out, oh boy, this ain't good. They get that. And so what happens is when the growth stocks and the NASDAQ really go up the most, when we lower rates, when we freeze them, but especially when we start lowering them down, right? It's better for growth stocks than almost anything else, like steroids being pumped into them, right? And you can see right here, remember, this was back in 04 through 07, high interest rates. We got over 5% because they were trying to cool the housing market, right? Well, the Fed knows when you see them stop lifting rates and start freezing them, you better go ahead and have your eyeballs looking at a computer somewhere trying to research. And then especially when they start lowering the rates, that is a telltale sign. They know, oh boy, here comes the recession, here comes, and it usually leads to a crash, of course. But right when they first start lowering them, what happens? Those growth stocks go crazy. And you can see that was in November back there where we actually did the crash, okay? And that's when they pop it down to 0. And so same thing here. You go over this one right here. We start raising rates back in 2015. One rate hike in 2015, 1 rate hike in 2016. 2017, you get 4, I believe it was. 2018, you get 4. Uh-oh, got to start slowing it down. Guess what's going to happen? And then in 2019, what happens? They start lowering the rates. And what did I show you on the charts there for the FANG stocks? They just start going almost parabolic, right? Google and all them just go crazy. Start taking off. Tesla on fire. And then you see what happens. Boom. If you're going to go into a crash, they lower it straight down to 0. And why I got you on here, a little extra bonus is, I've told you many times, interest rates do not have an effect on inflation for a long time. This proves it right here. The last 2 times we tried to raise it, guess what? That's inflation, the other line, right? I added that to this. What's happening? The Fed fund rate is going up. What is inflation doing? It's still rising, all right, for almost 2 years. All right, you go on to the other time right here in 2015 to 2018, and what do you see inflation doing? It's rising right along with the Fed's fund rate. And then of course look to the right, and that's the funny line going all the way up to almost 8%. That's where we're at now. And so by looking at that chart, you can see one, yeah, I can't imagine inflation. According to that, it's going to keep going up as they raise interest rates. Two, you know, which may be why they're trying to raise them so fast, because they've never raised it this fast, right? So maybe if they think if they raise it really fast, it'll actually have that effect, right? Because you saw there, once you get up probably like maybe around 2, somewhere around there, inflation does start to somewhat come down. And so maybe that's the reason why. But the thing to take away from this, for me, when I was doing this is the kind of videos I love to do with the research is, you know, one, I see now when the inversion happens, the same way that inversion happened yesterday, what did the market do today? Roar, huge day, right? Because you're putting the institutions, remember the institutions and people that run them and all that stuff, they're I think I've proven this with so many videos in this, they are the greediest people on the planet. They have no mercy on anybody, right? So what is their job? To get their bonuses, okay? To get their bonuses, to get all those fees they charge us for our Roth IRAs and everything else we invest in, the ETFs and stuff. And so, you know, what are they going to do? That's why in the last 2 times it's happened, that's why they've gone up, especially the FANG stocks, especially the growth stocks, right? Because they know they're on the clock. They're like, woof, all right, you know, it inverted. So guess what? We're on the clock here. We got about 12 to 18 more months, right, to run this puppy up. And then they know exactly by looking at that chart I just showed you, when that Fed starts flattening those rates, okay, the clock is speeding up. And then when they start lowering them, that's when they really know, oh boy, time to short, time to take the profits, and time to send this market straight down, right? And so, you know, not guaranteed to happen the same every single time, but the last 2 times, there you go. You know, that's what happened. Hopefully those charts even prove it. And so hopefully you got something out of that. I hope you did. I know I did. I enjoyed the research for sure. If you did, please hit the like and subscribe button. Share the video with people so they know. You know, there's no reason to be like, oh my God, the world is over. You know, 2-year, 10-year inverted. But, you know, understand also, as I got to say, I mean, I said it before, there's a lot of stuff going on, right, that we didn't have in the last 2 times. Yes, inflation is through the roof, bottlenecks, a war, and God knows what else. I mean, so, yeah, could this time be different? Sure, you know, but I said a few weeks ago, I did a video, I said, when this market turns, it's going to be so fast and go up so fast, it's going to just blow you away. And what happened? What are we seeing right now? I don't know how this speed it's moving up is sustainable, or why it's moving up this fast, which is mind-boggling. But remember, that's the market, right? That's the market. It makes no sense, don't have to make any sense. You know, like I said, if you took a step back and you knew nothing about the stock market and you saw that chart, you would think everything was just hunky-dory. We were in a Goldilocks type environment. You know, you wouldn't think any of this macro stuff that's going on out there is actually happening, which is kind of crazy. But, you know, let me know in the comments too. I'd love to hear from you guys about what do you think about this run up. You think we're going to all-time new highs again? You think this is sustainable? And then, you know, what do you think about this data? You think this is what's going to happen? If you live through 2000, or you invested in 2019 coming in, then you've already lived through it once. And so, you know, how did you react then? What did you do then? Did you see this coming? And, you know, did you know this about interest rates, right? When they start to freeze them and lower them, this is what's going to happen, right? And you're on that clock. So hope you got something out of it. Hit the like, subscribe button if you did, and I'll see you guys tomorrow.